The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN, TFNN.com and .mobi. You can listen to us on your mobile phone or live inside the e-signal platform. Let's check out where the markets are at right now. We've had some pretty decent moves. Some of the markets are a little bit flatter at the moment, but we've had just some solid moves across the board. Let's check it out where we're at standing right now from Friday's settlement. We got the S&P is down about 6 points on the day. Russell's down a little over 6. We got NASDAQ down 9.5, and the Dow down 43. Copper is currently up over 1%. Gold is up over 1%, moving big. Silver currently up about 2.5% on the day. Looking on over at our oil contract, oil right now is sitting on up. Let's see here. Oh, well, it's sort of flat at the moment, but it's had some massive volatility. I was just looking at that, and Basil was talking about that. We got a lot of really good stuff. Pesavento and everybody going through talking about the different outlooks on oil and what's going on. And I just love listening and finding out different commentaries. Some of the things I have no idea. Larry was talking about the break-even prices there and on oil and where it's at right now for Russia and how that's impacting the price. And we see it bounce right off that break-even. And just some really, really good stuff. So make sure you tune in or watch that. Listen to that show again. If you are an oil trader, you need to go back and watch Larry's show from last hour whenever they upload it later today. All right, let's check out natural gas right now. Natural gas currently down 3% on the day. We got corn up 2%. We got soybeans up over 2.5%, 24 points. Pound dollar is up 68 pips. Euro dollar is up 92. I mean, talk about volatility back in spades. Got the euro pound up 15, usually not super volatile in itself. Dollar freight down 49. Dollar yen down 79 pips. We got the euro yen up 9 pips. We got Aussie dollar up 64. Bonds up about a third of 1% right there. And we got the dollar index. King dollar is getting a little bit hammered today. Dollar index, it's got to take a breather, I guess, eventually. Anyways, down about 0.75%. So pretty big move in the dollar. We've seen some wild, massive swings right now in the dollar. All right, well, that gets us caught up so far on where everything is for the day. Let's go in and let's start checking out some of these charts, looking at some of these markets, see where things at. Maybe talk about some of the diagnostic day trading plans and just how everything's been coming together so far. And I'm loading up a couple charts for you. Let's see here. All right, we'll come back to gold in a minute. Let me go ahead and load up euro dollar. Euro dollar currently sitting up at 1.5 deviations on the day. So let's see, looking at the euro dollar, let me go back, pull up my plan, what we were looking at, and we just seen some solid moves, but we'll walk through it step by step for you. And looking at it right now, let's see here. We bottomed out at the 3.5-year trend line. A lot of people, just looking at everything. So 3.5-year trend line, bottomed on out. There's a small chance, that bulls can defend it. They have defended it. And looking for a break above 25.25. And with just a little bit off settlement, right? Just trying to see, hey, is it going to go either way? And it did break on up. And so basically what we're doing is we're looking for a break right here above 25.25. And went further than I expected. Looked at it bounced to about 25.45, 25.50. That would put me right at a half deviation. Well, I know that, hey, if we're going to hold that level, we're probably going to go another deviation. But that'd be target 1. And if that holds, and notice how, it did oscillate on you. It would. That's where I expected it to, pause out right there. But if it did hold, if it defended that after it got on up there, then looking to 25.50, well, that would have taken us up to the next deviation level at 0.7. And one of the nice things about, going in and looking at it, look a little bit higher, where up to, well, the continue higher was very natural, and it was like right on line. I had 25.70 to 25.75. Well, that takes us now. I mean, it was rough. Let's see, how high did we get right here? 70.75 was my range. We got 25.69 before we pulled all the way back down to 0.5, and then it ran on back up. So we did actually eventually hit it, okay? But it would have been a little scary in the process just with that big pullback. But we moved up one deviation. Again, we are at that massive low and basically expected that if that low were to hold, then we should expect to run on up to one deviation level. At this point, would be really looking for a selling opportunity and looking for probably it to, having your stops a bit above the 1.5 deviation level here, around 26.10. Would not expect a continued rise in the euro dollar through the rest of the day. And so first target would be back on down here to 25.73. And if it's able to break that, then, of course, we just break on back down, 25.60, 25.45. If it did fall all the way back down at 25.25, about as low as I'd expect it to go. But we got about a 25.95 right now. We're talking about 25.75, about 20 ticks down move. We're looking at on the euro dollar as a potential target at the moment, coming off the 1.5, coming on back down to one deviation. All right, so if you wanted to trade that, you could go in. You could look at a variety of the spreads. We have spreads trading until 3 o'clock on euro dollar. Let's see here. So let me pull that up. We'll go into it, and we'll walk through it step by step. We'll also pull up a couple other markets and see what we can come up with. All right, so got Nadex open, and if you don't have the scanner, definitely get access to that. You can get a free trial, free access to everything there on the site, and just hop on in. And let me go in, open this up, and we'll check out what we got. Been doing quite a bit of gold this morning, but I just want to see if there's something else we might be able to pull off first on euro dollar. Let's see here. Okay, so we're up there at the 25.94, sort of chilling out for us, which is nice. We got about a 20 tick target lower. We're sitting at 25.95. Let's see what the best spread we can get for a short. And so what I'm going to do is put that chart to the right for us. And we'll pull the scanner up here. Move it over a little bit. Let's go on down. Let's choose euro dollar. We'll deselect gold at the moment. Give us our 1-to-1s. We're looking for a decent little trade. Let's see if we can find one. And what do we got going until 3 o'clock? These longer expiration times right here. Just stretch that on out. Zoom in a little bit. We only have about a 20 tick expected move, so we can't use like these 21 and 41 ticks right here. Can't use that, can't use that. We could use the 11 tick one if we wanted. We have about a 1-to-1. We only got 44 minutes on it. Really, I know the risk is low, but it's just not worth it. We're saying it has to move that far in the next 45 minutes. So I'd rather have the extra time. I see a $44 and a $34. They both have the same break even. One has another hour. Well, I don't want that one. Okay, so we can rule that out. Now we got these left, and you can invert this the way I'm doing it too. You can go in and deselect, which probably makes more sense. Deselect the ones you don't want. All right, these right here are really close. They're the same amount of time. There's no reason to put up all the extra capital. No benefit. Right here, this one has a lot more prop potential to move a lot faster, a little bit longer. You got to put up a lot more money. If you had the account size, just to have the potential, if you're going to try to ride the thing back down a lot further, you could use this one. It's probably not going to make a massive difference. So I'd probably just go with this. And they're both expiring 104 minutes. You could do 3 times as many contracts for the same max risk. And we are looking at about with that one right there, you literally could decide not to use stops since we're going for a $25 profit anyway on the trade. You just go in there, set up the trade. Let's say you put on 10 contracts. But $25.94 right now. You place the order. Trade's filled. You're in the contract right now. Once that's filled, Then you go in and go, okay, well, what's my target? My first target at least is 25 what? So we're going down here for 25, 73 is the deviation. We're going to go for 25.75. I like to be in front of the line on my take profits. I like to be behind the line on my entries. So let's go ahead and hook that up. We'll go ahead right here and just hit this little button on the side. It'll open up a order in the opposite direction for us. And we go, okay, well, I want to buy back at 25, 75 right there. So that way we're buying back when it gets lower. And I'll go ahead and I'll do 5 of the contracts. I can watch the other 5 when it gets on down there. Place that order. And just remember, I know it sounds silly to say it, but people do get it mixed up. You buy lower than you sell. You sell higher than you buy. So if you sold at $25.95, want to buy back down at $25.75. Go ahead and put that in. Now you can see my order is actually working at the moment. I'm level 2 quotes right now. You'll get up to 10 quotes deep so that we can see with the new tickets that are coming out, they'll be up to 10 deep. You can only see 3 on the current tickets. But the new Nadex tickets, you can preview them over on the demo platform. They're coming on out. And so we just set that right there. If I see it pausing, hesitating, we only have a couple hours left. I may decide just to take my profit on it. Won't be a bad trade if that works out as planned. All right. Well, that's got some other people joining in right there. All right. Let's see how it turns out. All right. So you could, again, now, I do want to highlight something here as well, just to bring this up. Okay, we're going for a little over 20 ticks, about 20 ticks, depending upon your fill. And we got, 30-something ticks, but you're going to give up 3 ticks on your bid offer spread to get out. You're going to give up another couple ticks just on your fees, or at least one more tick on your fee. You're going to give up about 4 ticks just getting out of the trade if it goes against you. So if we're about 20 to 35, or we're about 25, 35, you got to decide, is that 10 ticks? Which, can be a decent amount of money. 10 contracts, 10 ticks, that's $100. But is that worth getting out, or is it just one of those, I'm just going to let it do its thing, not get stopped out? Because when you get stopped out, you do increase your probability of, it sounds weird, but you increase your probability of loss. You reduce your risk. And I'm not saying one should not use stops, but I'm saying evaluate your stops when you have a capped risk product. So, for example, I'm trading a spread, sort of like buying a put. I have capped risk. It's like, buying a 26.30 put. And if I go in there and I have, 20 pips of risk on the trade or 30 pips of risk on the trade or whatever, is it worth getting out when there's only 20 against me? So it depends on how often you're right, how often you're wrong, and whether or not that 10 pips really, eats your lunch. But we'll talk a little bit more about that when we get back, is really determining when to use and not use potentially a stop when you have that capped risk advantage. Stay right there. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's see here. All right, so what we're going over is we're looking at a short trade setup on euro dollar, actually an entry that we've already taken. We're short on the contract, so we're going to take it off half when it comes back down to the one deviation line, 25.75. We got to move lower, potentially down to the 0.7. As you can see, I've drawn a trend line from early this morning, and just basically putting the dots together there and looking at sort of a continual to see if it goes on back down. If it does move back down further, probably may oscillate right at this trend line. I wouldn't be surprised if we might get down to 25.60, but I have at least half my take profit set in there at 25.75 on the trade. The idea here is, we're risking, $30-$35, depending on your entry, and we're going to make $20-$25 on that trade. And we're talking about, so do we want to make that more of a one-to-one risk reward, which isn't a bad idea, obviously. But when you add in a stop, you obviously increase the chance of getting stopped out if it goes against you. Is that bad? Yes and no. So if you don't have capped risk, then no. It is good to get stopped out because your risk can keep growing and growing and growing. But if you do get stopped out, you are going to potentially consider doing another trade. Am I going to add in another short? Am I going to add in a long? Okay? Or am I just going to sit on my hands and watch what happens? Okay? So if I can go and go, I'd add another short in for another 20 ticks of risk, then why not just leave the current one on for 10 additional ticks? Because I may not have to take on that loss. I may not have to take, it is a loss once you're in it. Once you're down, the loss is there. If you're down the ticks, I don't care if you close the trade, you're down it. You may make it back, but you're losing it and making it all the same if you had any chance to close the trade earlier, But sometimes I will go ahead and maybe not have that perfect 1-to-1 ratio simply because I'm like, another trade would actually make my ratio even worse. Because if I took a trade for 20 ticks, 25 tick loss, and then I go in and take another trade for 25 tick loss, now I'm risking 50 ticks to try to make, say, 20 ticks or 25 ticks on the trade. Well, this one I can risk 35 to make, 20, 25 ticks on the trade. And then I pay bid offer spread, I pay fees, I pay psychological damage, which is sometimes the most expensive. And so I'm not saying like have bad risk reward, jack everything up, but think about it. If you're going to take another trade, you probably will be risking more than 10 ticks in that process. Would you be better off holding it or not? Do you have a reason to think it's still viable to hold it or not? And this could have a loss up to 26, 30. So there is some room for it to go up and, definitely hit the 2 deviation level. Even if it went all the way up to that point, unless it expires right at the 2 deviation level, which is always possible, but unless it expires there, we won't take on that max loss. Every ticket comes back down. If it comes back down and settles at 26.02, we'll lose like $8 on the trade. So it's not an all or nothing play like on a binary contract. It's a variable payout. So we could get at that max loss, but as long as it comes back some, we'll make back some of that loss, maybe make a profit on the trade in the process. We just have to let it play itself out and see. But I can tell you I definitely do love trading when I can trade without a stop loss because my risk is capped out. I don't have to freak out. I don't have to be looking at the charts every 5 seconds. I can put in my initial take profits, put in any price alerts in I want. But I don't need to look at it, stare at it, and meditate on it and, have my heart go with every single tick and be thinking and praying and wondering, I hope it comes down, I hope it comes down. I don't want to get... And most of that comes from the issue of getting stopped out. It's not just the issue of losing. It's the issue of getting it stopped out because then another decision has to be made. I know I have no other decision to make until at least my first target is hit. And then I can decide to close the other half depending upon what I see happening in the market. Or I could trail it down to at least break even, which would be very wise, right? So when that gets hit, move it down to break even for my other stop. Okay? And then, decide if I want to trail further. So do I want to every 10-minute bar? Do I want to use a 10-minute deviation stop method? Do I want to target the next level at 0.7 with a break even or 0.5 deviations with a break even on my entry? How exactly do I want to set that up? But the next time I have to make a plan is once my first profit target's hit. I don't have to worry about it going against me because I've already resolved the fact that this is the amount of money at risk on the trade. At worst case scenario, and there's nothing I can do that's going to make that worse besides add in contracts and stress myself out by staring at the chart every single second, which sort of beats the point of trading on Nadex. It should be a little bit boring because now I'm just waiting on the market to move. It's got 90 minutes to do it. All right, that's a beautiful thing when you can learn just to let the market do its thing, make your plan, trade your plan, and back off. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. Checking out the DAX. It has been getting hammered. Ran up, fell on back down, pulled on back down. Some great shorts right there on every E-bar. Just entry, 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 entry. Trailing that stop on down. Had a couple good profit poppers along with it right there into the -1 deviation level. Tons of momentum scalps as well. So lots of really good trades. Let's see what else we got going on. We got the Russell right on up here. Let me see. On the Russell, moved on down. Definitely hit one deviation line. We've been sort of sitting right at that -1 high to, not line, but -1 high to low deviation level. And so just some great big moves. And some nice, momentum scalps going into these levels. And lots of, profit poppers in that process. We'll get on over at the S&P. And S&P has had some interesting moves today. We'll come back. We'll try to analyze a few of these markets for you in more detail. But right now, looking at the S&P, it's been moving on down, down, down. Sort of flattened out a little bit. Again, we are at the 1 deviation level right here. And that's usually where we expect the market to go flat, oscillate, potentially reverse on the trade. We ideally, before we go for a full onslaught reversal, we like to see if the close above and then close below it. Otherwise, we'd be taking in some of these trades a little bit earlier But looks like this one did close down and up and actually had a little pop up right there. Going on into the NASDAQ. And on the NASDAQ right here, we got, let's see, we have actually hit today the one deviation. We notice how we popped up 0.5, we popped down 0.5. We actually had momentum scalps all the way in to the deviation, like a one deviation amount of momentum scalps all morning long. Every single bar took us short once we flipped around there on that short side, and the long didn't have a breakout. So, but yeah, that was really nice. Let's see, oil. Let me pull oil up for you. And just had some, like I said, some nice moves in oil over here. All right, so up 0.5, down 0.5, coming on back up, bouncing off that, $89 level, sort of trying to hold in there and then bouncing right off of it, which was right at the one deviation level as well. And coming right back on up to settlement. A reminder today, very important. So we're going to be finding out who the winners are. And let's see here. So pulling up the virtual trading competition, Tommy's going to be announcing this. So you definitely want to tune into his show today and see if you won. So you're up there. We have Norwood maintaining that second place last week. We got Willard climbing on up all the way up to third place. We got Coombs coming out of nowhere and going into first place. A lot of nowheres coming into first place. So the question is, do they stay there? We're going to find out today. And so just some really, really good moves. Fady, maintaining, staying on up in there. Very, very cool. So I love seeing the people who are able to maintain it. Ziegler going a couple days in a row right there. Keserman doing the exact same thing. And let's see here. That looks like our main people that are climbing on up. And then we had 5 more winners announced last Friday. I know one of those names on there, Mrs. Drummond or Mr. Drummond there. Congratulations for being one of our daily contest winners, along with Parker, Jackson, and English. So just been a lot of fun. I hope you all enjoyed it a lot. We look forward to doing more contests with you and adding in more and more variables to it, just making it interesting each and every time. But make sure, again, I know I'm going to be tuning in. I hope you're tuning in. We're going to find out who won and see who took home the cake on this one, okay? Let's see. Where are we? We have the trade competition, the dollar index. Let's talk about that. Dollar index been dropping a bit. So let's see. Let's pull this on up. We got some news. I got a couple articles I usually, as I'm looking through, just, give me some highlight moments and all that fun stuff. But I got the Euro USD. We talked about that, regaining some of that strength, basically just bouncing off that massive trend line. I don't know if I would call that strength or if I just call it, a one-day bounce. And we'll see. Of course, now I'm hoping it goes down a little bit because I'm short. Hopefully at the top. We got the pound dollar. It's climbing. It's above 1.6, moving on up there. And we can throw that up there. Well, that was not working. Close that one on down. And we got a lot of global stocks that we're doing some rally, some of the global stocks. And the U.S. markets, like I said, but a little bit mixed, up, down. We got earnings season kicking back into full gear. So coming on up. So get ready for that. We'll be talking about all the earnings plans. And let's see here. There's a lot of fun things you can do with earnings season. It throws some crazy volatility into the market. So you want to be ready for that. A lot of good U.S. prospects. Europe and China obviously could be taking it on down. But we do have earnings season coming on up. Let's talk about the news trades, too. Let's get that one on out there. And let's see here. So on the news trades, looking at today, we got, now yesterday, don't forget, Australia was in holiday. That can sort of carry over a little bit. China was in holiday. Today, China's in holiday again. And let me pull up our news trades that I have on my little plan I make every week, where I go in and analyze all the fun little stats for you and try to make this easy. We got some stuff coming out tonight that you're going to want to be aware of. We got the Aussie dollar cash rate coming on out. That's their interest rate statement release, okay? Usually not a big mover. We look at basically the past year and go, would these stats work and be profitable if you've done them 12 months in a row? So that's where the stats come from. And most of these announcements come out once a month. Some of them come out once a quarter. Some of them come out weekly. But anyway, so look at these right here. Minimum profit, $35. Doing an iron condor. Entering at 11 p.m. for a 7 a.m. expiration. The announcement comes out at 11:30. We're just trying to maximize as much of that as we can get. Again, $35 minimum profit, buying the lower spread, selling the upper spread. Check it out, the dollar franc CPI. And on this one, we're going to get 11 for a 7 a.m. There'll be CPI and retail sales released out of the franc. And we expect that to stay within a 25 pip range. So we're looking for a $25 minimum profit between the maximum profit on the bought spread and a minimum profit on that sold spread over on the Nadex exchange. When you combine those two maximum profits, that number needs to be a minimum of $25 or greater. Okay? And that will wrap up that. Then we got one more trade for you tonight. So we got a lot of little news trades going into the overnight trades here. We got another 11 p.m., 7 a.m. We got that one on the pound dollar, on the pound manufacturing industrial production report. That'll be lreleased at 4:30 in the morning. We're looking at 11 p.m. entry for a 7 a.m. expiration for a $35 minimum profit on the iron condor, of the two max profits being a combination of at least $35 on your bought spread and your sold spread. Then that carries on into tomorrow. We'll also have some monetary policy confidence reports coming out. Bank of Japan press conference, we expect that to be somewhere around 2:30. So be aware of that one on the yen. We're going into a franc currency reserves coming out at 3 a.m., but we already have a franc trade on. We're not worried about that one. We roll into the morning CAD. We got a news trade for you in the morning. So that's 8 a.m. to 10 a.m. Usually the CAD building permits news is usually a very, very small mover. And so we're looking for an entry at 11 p.m. Not 11 p.m., at 8 p.m. Been saying 8 a.m. There we go. One of those words. 8 a.m. for a 10 a.m. expiration. Again, that's an entry at 8 a.m. for a 10 a.m. expiration. Okay, for a $25 minimum profit on the trade. Okay, and that's buying the lower spread, selling the upper spread. That is going to really cover you for tomorrow. We got the pound NICE or GDP estimates coming out at 10 a.m. U.S. JOLTS job openings, 10 a.m. These are usually small things that don't have a consistent impact. FOMC member Dudley's going to be talking at 3 tomorrow. Just because he's talking doesn't mean the market's going to move on it. But it's good just to know it's there. Got ags reports. That's after the ag market's closed anyway. We got the yen current account at 750. Usually not a massive mover. China HSBC, that can definitely impact the Aussie and the yen. I'm glad that Nadex is looking at potentially adding in the new China 50, FTSE China 50 index based on the Singapore exchange and SGX, because that'll give us a way to potentially take advantage of some of these Chinese announcements that are coming out. And then let's see here. We got FOMC member, I don't know how, Kachirakota. So I probably bashed that name. But anyways, FOMC member is going to be speaking. And that really wraps up most of the events. But that's going to be a nighttime event. I think I have a typo in there. Let's see here. When is he talking? Tomorrow. Is it 11:20? Or is it 10:20? It's 1:20. Okay. So I just need to update that one. And go on over here. 10:20 a.m. There we go. Okay. Or 1:20 a.m. 1:20 a.m. There we go. 1:20 p.m. And that'll solve that report. But I'll get that fixed. But at 1:20 p.m., I got 1:20 there. It's just right here. I had the wrong information. Okay, so that'll wrap that one up for us. That really knocks out all of tomorrow. What else do we got going on this week? We're going to have CAD housing starts. We're going to have a weekly oil inventory. We got every week. We got an Aussie dollar employment change coming out, looking for a nice straddle there. On the 9th, we're going to have the bank rate and asset purchase facility, basically the pound interest rates, usually a smaller announcement. Will be a little bit interesting to see how it goes. I'm going to go back and we're going to look at that one in detail. Just how has it went without the euro stunning it? Because when the euro is going to come out, a lot of times that does stunt the movement. So if we don't have it, I need to look at all the different impacts where we did not have a euro announcement on the same day. Aussie home loan release, we'll have that on Thursday. And then we'll also have the pound-dollar trade balance report. All of those tradable events, natural gas inventory, and U.S. unemployment claims for volume spike, striker, reversal trades. And we got the CAD unemployment rate, and employment change report coming out this coming Friday. It usually happens on the same day as NFP, but somehow a lot of the reports have got a little off-kilter now on a different week. And it looks like we also have a big ag wage report coming out next Friday, which can have a massive, massive impact on our ags. So you'll want to make sure you have that one down. And we'll have to look at that. That's a hard thing to trade. They're not the most liquid markets, but they definitely move a lot. And some people, that's just a warning to stay out of the way. Other people, it's game time. So just really, just want to, put it out there. And, just very, very cool seeing, how all these play out. And let's see what else we have. Okay, let's see. I'm trying to see any other. Okay. All right, well, that's basically our main news reports for the week. And you got the news plans for at least today and tomorrow to make sure you're taken care of there. Let's see what else we have. Let's go back in. Let's look at how our euro-dollar trade is doing. Just sort of chilling out over here. And not really moving anything major. Not breaking any headlines at the moment. But slowly, sort of ticking down, ticking up, ticking down, ticking up. And, just waiting on it to, do its thing. But right now we're pretty flat on the trade. And I'll be watching it. And I may decide to, if it just doesn't do anything, we may just decide to, bail on the trade and move on. But we'll see how it does. Hopefully it'll move down and at least get back down to our one deviation level for the day's over. It spiked up right there. We got a little bit of a volume pop. Moved on back down. So hopefully it'll, like I said, just give us, just a mere 15, 20 ticks. We'll be very happy with that trade. Okay. Let's see here. What else? Let's go through. Let's look at a couple other markets. Okay. See if we can maybe find anything else, or at least do some analysis for you. I'm gonna go in. I'm gonna pull up the S&P. So let me grab another chart. I'm gonna leave that chart open. Obviously, have a trade open on it. Might want to be able to look at it. And we'll go over here. And since gold's closed, we'll have to come back to gold on a different day. Okay, and now let's go in and look at ES. Okay, so move up to 0.5, down to 0.5, and what levels was I looking at? We had a big bounce, obviously, from 1920 for the low of that 2-week correction that we were looking at on Friday. We held above the 43, 45 area, and we reached our 56.58 profit target, which was a beautiful thing. We hit right up on there on that one deviation. Once we hit that, then we were, hey, it looks like we might still have some positive movement. So target looking on up to go to 1970.72. We'll talk about, we'll break that on down after this break. You stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. So checking out the S&P, it's looking on a move up to the 0.5 deviation level. If it was able to break above that, I was expecting a continued move on higher up to 1978 or so. And tying that into deviations, that'd take me like right before the 1 deviation move. So that ties in perfectly at 1978. We got up to it. We didn't really close above it and break above that close. So didn't continue to move higher. It worked its way on back down. I was looking on a move that would dip below 1960. We did break below that. We closed below that. And then we broke the low, the close below that. And it flew on down with, like, really fast. It bounced back up, though, gave you a second chance for entry. Then moved on back down right to the 0.5 deviation level, giving us our 1 deviation move on the day from the high to the low. So just a nice layout from here, just backing off. Don't see anything else happening really on that market. And not anything that I have in my playbook anyway. Let's see what else we have. Go and check out gold. Gold was a little bit interesting today. So it had a nice run. It had a potential reversal. And a big reminder out there, a lot of traders forget about this, especially when they're trading on Globex. But things really change when the pits close, especially when you're getting close to that pit close. One, there's a massive volume spike right here. That is traders who have bought, taking profit. How do I know that? Not only do you have the volume spike, it backed down. It's and we don't break higher, and we do that like literally that happens when there's 30 minutes left on the close. So you may get a reversal trade all the way up here, and that could be a valid signal. But to expect it to do much of anything after the pit, that's really, really hit and miss. It's like maybe 30% of the time, maybe. So not saying it's horrible, not saying it's bad, but I'm just saying you need to really understand that there is a different crew on, there's a different crew on shift, okay? It's a different group of traders, a different personality past 130. All the pit guys are gone, okay? Europe's gone. Asia's well gone, okay? So now you just got Globex traders, and that's it. And that's why your volume goes to nothing, okay? So a little bit easier to move around if a big boy or girl decides to come in and start moving that thing. So just to understand, even though you can get reversal trades right here, you don't have the same group of people that was pushing this thing up to bring it back down for you. And that same group would love to bring it back down for you, but they've decided to go home, or they've walked into another pit, okay? So just be really aware of that difference. And let's see, do I have anything else on that? But there just really wasn't a whole lot. We had that big bounce on up. I actually was surprised it popped up to 1209. I expected 1204 to 1205 actually to be the high of the day. And so it popped up a few more points, pulled on back down. And so it definitely does give a potential, short. But, really we moved up good. I mean, we had a solid move up there. And I would expect stops to be up at 1205. And they pretty much were. So all those stops got hit, nailed. That's when you get that pop, okay? And then turned right on back around. All right, so let's see. I have a lot of analysis for going short, but we're up so high right now, it's not going to do us a lot of good unless we're talking about a whole new day of trading. We could check out the Russell. We just covered the S&P. Let's do a little Russell recap right here going into the bottom of the hour. It looks like that's all we have time for today. Make a decision whether you want to get out of that euro-dollar trade, of all of it, whether you want to put a stop on it, maybe just a few ticks above the deviation like at 26.10, or they're going to let the thing go all the way to expiration. But make a decision now, not as it moves. All right, have a great day, and I'll see you tomorrow right here on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.